Hey, Bobby Trades! I want to do a video analysis update of the stock market. We'll talk about the S&P, but first, I want to talk about risk management. I want to share some of the options, straddles, and strangles that I've been sharing for a little bit. I've updated some of the positions. I've adjusted some of the positions and I've opened and closed some of them. So I wanted to update what I'm doing to give myself upside and downside exposure. So the Kinder Morgan strangle that I shared I bought in November was originally the January 17 strike call was $145, and the 15 strike put expiring in January 2023 was $145. So the lot total was $290, and I closed that position for $355. That was a 22% gain. The Credit Suisse straddle, I bought the 10 strike call and the 10 strike put for 118 and 123. We had Credit Suisse go down, so I sold the put leg on March 6th for $330. The original total lot for both options was $252. So that was a 30% gain. And currently, I'm using ET and ICLN strangles and straddles to give myself a lot of downside and upside exposure. So the ET straddle, I have the 10 strike call and the 10 strike put expiring in 2023. So the 10 strike call is currently 176. The 10 strike put is currently 106. So the lot total is 282. We had a little bit of a pop in ET. And when we did, I bought the 12 strike call and the 10 strike put expiring in 2024 for 141 and 185. So the lot total is 326. ICLN, I originally bought the strangle when it was a $23 to $24. I adjusted it after the drop, and I locked in a 17% gain by lowering the strikes down to about 20 and 19. So the 20 strike call is currently 163. The 19 strike put is currently 168. So the lot total is 331. We had a little bit of a pop in ICLN, so I bought the 12 strike, the 12, 22, 21 strike call for $123, and the same expiration 20 strike put for $220. So that total lot currently is $343. I want to talk about Delta dollars. Why am I, doing this? The biggest reason is to get exposure. So there's this concept called Delta dollars where you basically take the delta of an option, you multiply it by the underlying value of the stock, and that gives you kind of how much exposure you're getting, as opposed to going out and just buying the shares, right? We all know options give you a little more exposure than shares, and Delta dollars kind of quantifies how much. So the delta of the put last night when ICLN was at 19.35, the 20 strike put had a delta of 50. So 50 times 19.35 said that put was giving me about $967 in short exposure. And for the call delta had a delta of 42. So 42 times 19.35 is $812 in long exposure. Another kind of, idea about this is that if ICLN fell, and this is what I believe institutions do, when they buy a straddle and they buy a strangle on a stock and it falls, and the put delta gets really big, in theory, they can buy common stock against that bloated put. So basically, if ICLN fell to 90, if ICLN fell to say 15 or 16, and the put delta rose from 50 to 90, in theory, I could buy 90 shares of ICLN against the in-the-money put, and the position would already be kind of pre-hedged. Some would even say be risk-free. And what if ICLN rose? What if it went the other way? What if ICLN rose to 25? So the call delta rose from 42 to 90. In theory, I could short 90 shares against the in-the-money call. Now, shorting is a little different because, you have margin requirements. Another kind of last thing I wanted to add, the beta of ICLN is 1.18. The ET has a beta of 2.06. So in theory, statistically, these stocks are more volatile than the S&P. So if SPY goes down, 3%, I could reasonably expect that ICLN would be down a little more. ET would be down a little more. Now, I know what you're thinking. Well, what if because of Russia? What if because of Ukraine? Right? When SPY goes down, it causes the energy stocks like ET, like even clean energy stocks, to go up. Well, the good thing about this is it's a straddle, it's a strangle. I'm buying a call and a put. So even if the correlation doesn't play out, I'm still glad I have this at the end of the day. So one thing you might be thinking is puppy trades. That sounds like a lot of theta. It sounds like you've got all these options, so you have a lot of theta risk, right? Well, and that's completely true. So I'm balancing out the theta risk by taking positions in JEPI, RYLD, XYLD, XYLG, and NUSI. If you're not familiar with those are covered call ETFs. They basically own the underlying indices or the underlying stocks, sell options on them, covered calls on them, and then return the premium to the shareholder in the form of a dividend or return of capital. So that's kind of how I'm, combating theta, even joining theta gang a little bit. So that's risk management. Here's SPY. It formed a wave 1 and a wave 2. Then went on a big wave 3, right? Everyone said, oh, wave 3 doesn't work, right? We're going to go down, retest the March lows, right? The bulls will learn this time. Anyway, the length of wave 1, place of the wave 2 low did end up giving a conservative wave 3 target of about 460, right? And we had a wave 4 correction at the 38.2% retracement. Wave 3 went past the 161.8% extension of wave 1. So I believe this is wave 1, wave 2, wave 3, wave 4. So the length of wave 1, place of the wave 4 low, gives a wave 5 target of about the 550s. Now, if we're above 400, then I believe this is a wave 4. If we go below 400, there's still the opportunity that this is another wave 1 and another wave 2. We'll talk about that when we get there. And the reason I'm not going to talk about that now is because if we look at XLV in the short term, I'm going to go out on a limb and I say I don't think there's going to be an A, B, C correction to the 390s. So what are you going to see a lot of in the Elliott Wave community? Let's just kind of address the kind of counter argument. What do other Elliott Wave theorists, especially ones that sell subscriptions, so they got to make sure they have both of their opinions always being made known. The market can go down, it can go up, it can go up and go down. All right. Well, I don't do that. All right. I just give you guys my kind of primary view. What are you going to see a lot of in the Elliott Wave theory community? You're going to see an A, B, C correction where the length of wave A places the wave B high is supposed to take SPY down to the 390s. Now, in my opinion, if that happened, that wouldn't even be that bad for the long term. Now, it'd be very bad for people who really care about being called bag holders in the short term, right? And, they get their dopamine fix from the stock market. But that's not anything that I'm concerned about. And I think even if we had a dip down to the 390s, it'd be wave 1, wave 2. We're still looking for an explosion in SPY. We'll talk about what that kind of explosive move would look like with or without another leg lower. But I do not believe we're going to go down to the 390s. Okay, so I'm prepared for it with the straddles that I just shared, with the strangles I just shared, with, kind of always having a little bit of cash, the dollar cost average over time, right? It's not about, that's the big thing about dollar cost averaging. You have to dollar cost average over time, not dollar cost averages yesterday and I'm going to buy again today. Now I'm out of money tomorrow. Anyway, I think that this is a wave 1 and a wave 2 for SPY, and this is a big wave 3. And we ended wave 4 at the 38.2% retracement. The length of wave 1 placed at the wave 4 low is going to take SPY up to the 550s. We'll talk about with the global indices, with even some American blue chips, why that could be conservative. One thing I want to talk about is the short term. I want to address people who want to get their dopamine fix. All right. What is a reason that I'm not betting on SPY going down to the 390s in the short term? Big reason is XLV. All right, so XLV, people are going to say, oh, puppy trades, well, they're healthcare stocks, so they have special this and that. XLV, I believe, has a coefficient correlation of about 0.73 to SPY. So basically, the S&P and XLV are pretty damn correlated together. Okay, you normally don't want to be betting on one if you think the other one's going to go down. I think XLV very quietly broke above the December high, right? And I talk about AstraZeneca. I'll save you guys AstraZeneca and John Deere and Walmart. I'll save you guys that rant. I've talked about Walmart, AstraZeneca, and John Deere enough. How they made new all-time highs. I didn't even talk about Burger B. But anyway, XLV broke above the December high. And I think if we really want to zoom into the short term, we have a wave 1 and a wave 2 that's formed from that low. So that's kind of what I think in the short term. XLV has kind of ruled out the ABC more downside view that we're going to be seeing a lot of, because it's already broken with AstraZeneca above the December high. So I think from this low, this is a wave 1 and a wave 2. We're at the 61.8% retracement. wave 3 can take XLV up to the 150s. Now, for a broader wave 5 target, for kind of the larger view, I think this is a wave 1 and a wave 2. This is a wave 3 and a wave 4 that ended at the 38.2% retracement. So the length of wave 1 placed at the wave 4 low gives a pretty conservative wave 5 target of 160, which is basically the exact same as taking the length of wave 3 placed at the wave 4 low, giving a target of 165 a little further. So I think from this low though, right, if it's got to be super short term, if it's all about dopamine, XLV says don't bet on SPY going to the 390s. I think this is a wave 1 and a wave 2. I don't think XLV is going below 124. This is wave 1 and wave 2. So XLV is going to go on a wave 3 to the 161.8% extension, which is up at 155. So that's the short term. Let's talk about tech. Let's just start going in order. I was going to get cute, but we're not going to get cute. I think that Apple formed a wave 1 and a wave 2, had a big wave 3, subdivided into 1, 2, 3, 4, 5 waves, and I think it ended wave 4 at the 50 to 31.8%. Sorry, I was just thinking about how tech earnings are in 5 minutes. Anyway, or at least Google's are. Anyway, 38.2% retracement to 50% retracement, I believe, ended wave 1, wave 2, wave 3, wave 4. So Apple's going to go on a wave 5 higher. The length of wave 1 placed at the wave 4 low gives a silly target that I honestly shouldn't even be using as a wave 5 target, because I think from this low, if this does end up being a wave 5, then wave 1, wave 2, wave 3 has already shown that we're going to go past the conservative wave 5 target, which is the length of wave 1 placed at the wave 4 low. That's about 192. I think wave 5 is actually going to be the length of wave 3 placed at the wave 4 low. And I don't know if I've mentioned this, but before every single one of these rallies, every single one of them, without exception, Apple was all over the bar chart, straddle, and strangle screener. Okay, and it's on it now. Just a data point. Anyway, I think this is a wave 1 and a wave 2. This is a wave 3 and a wave 4. Apple's going to enter wave 5, hold above 149 to 141. I think 149 to 141 would be a little tight. A lot of people don't like trading against lows. I think right now the best low in the market, maybe outside of in-phase energy, maybe outside of AMD, is XLV above 124. I think Apple, though, will hold above 149 and begin this wave 5 higher. The length of wave 3 placed at the wave 4 low, in my opinion, takes Apple up to 216. Here's AMD. Oh no, it's just like a year ago. I see AMD on all these option screeners. I think it's getting ready to do well. And because I'm filming this video during the trading day, I'm going to have to update or reload some of these charts, some of these pages, but I really like, should I wait? Oh, well. Anyway, let's do Nvidia, then we'll do AMD. Nvidia looks like it already loaded. AMD looks like it just wants to give me more headaches than it already has. But if we look at Nvidia right now, I think Nvidia has fallen to the 61.8 to 78.6% retracement of this rally from March to November. So I think Nvidia forms a wave 1 and a wave 2, and then goes on this big wave 3 that I'm pointing out went well past the 161.8% extension of this rally. So this is a wave 3, and it normally gets a little silly to call a 61.8% dramatic correction like this a wave 4. Normally, it's another wave 1 and another wave 2, which is what we call in Elliott wave theory a nest. So we're at the 61.8 to 78.6% retracement. Whether or not this is a wave 3 and a wave 4, or it's another wave 1 and another wave 2, I'm expecting the length of wave 1 placed at the wave 2 low to go take Nvidia on another thrust higher up to 420. That's the length of wave 3 placed at the wave 4 low, or the length of wave 1 placed at the wave 2 low, which is the 61.8% retracement of the rally from March to November. So we're at the 61.8% retracement. I think we're ending a corrective wave. Then it's going to be followed by an impulse wave. That's the length of this rally placed at this low. Above 165, I expect Nvidia will head up to 420. Let's see if we can get AMD to load. I really like this take, believe it or not. I thought it'd be fun to do a video during the trading day. Of course, we can't ever have fun. But anyway, here we go. AMD forms a 1, 2, 3, 4, 5 waves impulse from this low, just like it really is pretty similar to last year, where AMD was consolidating in this range. I still have to post, right? I don't delete any of my posts. Like, some people. Anyway, AMD was consolidating in this range, kind of going down all over the bar chart, straddle and strangle screener, all over my favorite option screeners. And then we had one little more kick down. Everyone said, ha, 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 and then we exploded, okay? And I think that's happening right now to, a long list of tech stocks where we had the first quarter was all about value, all about energy, but everyone ignored energy because they thought it was, diversifications for losers. Now everyone's becoming an energy bull, and it's time to become a tech bull. Anyway, 1, 2, 3, 4, 5, wave 1 for AMD, ABC correction, wave 2, ending at the 78.6% retracement. The length of wave 1 places the wave 2 low, in my opinion, takes AMD on a wave 3 up to 180. Now, in reality, I think that's a conservative wave 3 target because wave 3 usually goes to the 161.8% extension of wave 1. But even if there is a shallow wave 4, the retest of wave 1 high, and wave 5 is the length of wave 1 places the wave 4 low, then all in all, in my opinion, waves 1, 2, 3, 4, and 5 can take AMD up to the 250s in the long term. Now, a lot of people don't like thinking about the long term. We'll get to that later in this video. Like I said, if you really need your dopamine, you need to get that needle in your arm, then you can have XLV above 124, and that's the short-term view. XLV above 124 takes it to 155. Okay, for people who don't need their fix, I think this is a wave 1 and a wave 2 for AMD, and AMD above 72 can take it to the 250s for waves 1, 2, 3, 4, and 5. That says wave 3 goes to the 161.8% extension of wave 1. There's a shallow wave 4, the retest of wave 1 high. Then the length of wave 1 placed at the wave 4 low can take AMD up to the 250s. I think it's a pretty similar, idea with in-phase energy and First Solar. Now, I normally just include in-phase energy and First Solar with the clean energy stocks, but the market kind of sees them as semiconductor related-ish names. I think First Solar is actually classified as a semiconductor stock, but in-phase energy, First Solar, and Tesla, I'm going to include with tech for this video. I think this is a 1, 2, 3, 4, 5, a big wave 1 and a wave 2 for in-phase energy. I think from this low, we form another wave 1 and another wave 2. We can see in-phase energy begin wave 3 of wave 3, taking it, the length of wave 1, placed at the wave 2 low, on a wave 3 higher up to 287. So for growth, this is one of my favorite charts right here. In-phase energy above 113, is really defining the risk. And then the reward is almost even more substantial, right? The reward is pretty substantial. The length of wave 1 placed at the wave 2 low gives a conservative wave 3 target of the 280s before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, then just like AMD, I think we can see in-phase energy go on a pretty substantial rally up to the 450s, above 108 to 113, very similar to AMD going to the 250s above 72. So here's Tesla. It's given, a little bit of evidence recently. It's not quite XLV. It's going to be, in my opinion, it'll be at an all-time high in a certain point, and then that's going to be a big piece of evidence, okay? That's going to be a big piece of evidence for bulls. Right, because no one cares that AstraZeneca is at an all-time high. No one cares that John Deere is at an all-time high. No one cares that, Walmart's at an all-time high, because those stocks are boring. But I think people will care when Tesla's at an all-time high. Maybe. Anyway, I think that Tesla forms a massive wave 1 and a wave 2. And then from this low, this is a wave 1 and a wave 2 at the 61.8% retracement. The length of wave 1 placed at the wave 2 low gives a conservative wave 3 target of 1400 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low, if wave 4 retests the wave 1 high, says, all in all, Tesla can head on up to the 1900s in the big picture. Now, big pictures are boring, right? Well, the Tesla used to be a big picture count a long time ago, right? And a lot of people, they're not around long enough to know, or experience a 500% rally in Tesla and Bitcoin, okay? So anyway, wave 1, wave 2, wave 3 should take Tesla up to the 1400s before a shallow wave 4 and a wave 5 higher. What started out as a long-term count just continues to get, better and better. And I think one interesting thing about Tesla that we're getting, it's a little unrelated. It's a little related. Sometimes the market gives you a correlation that, might not exist for a while. And then all of a sudden it starts to exist. Like when, the stay-at-home stocks, started doing one thing and the reopening stocks were doing the complete opposite. If you had to become aware of that, I think that Twitter is starting to become something that I think, people have to pay attention to. Luckily, I was paying attention to Twitter for a while because it was on the bar chart, straddle, and strangle screener, right? So institutions were buying lots of options on Twitter before this happened, right? And just like they were buying lots of options on oil in December before that war happened. Anyway, Twitter formed a wave 1 and a wave 2. It's all over the bar chart, straddle, and strangle screener, right? They're buying lots of cheap options. No one knows why, and then we all find out why together, right? Isn't it fun? The length of wave 1 in place of the wave 2 low can take Twitter up to 92. Now, that's a big deal because Twitter is a social media stock, okay? So I think ultimately, yeah, that is wave 2 at 31. We're going to see Twitter go up to the 90s for a conservative wave 3 target. So why do we care about Twitter, right? I don't care about Twitter. Twitter's a... Well, I mean, we all kind of, you're probably watching this through Twitter. But anyway, Snapchat is also a social media stock. It also formed a wave 1 and a wave 2, and it's also seen a lot of action on the bar chart, straddle, and strangle screener. Does that guarantee that Snapchat's about to go to the moon? No, but I wouldn't be surprised if we found out some news from Snapchat, right? Some totally new thing no one could have known about except for all the people buying options on it. But anyway, the length of wave 1 places the wave 2 low. This 1, 2, 3, 4, 5 waves impulse looks like this is a massive wave 1. It looks like this is a wave 2 that ended at the 61.8% retracement. So I think one thing to watch, all of a sudden, let's see if we get some news from Snapchat. All right, let's see if we get some news from Snapchat. It could be the next one in the social media sector to follow Twitter. I think it holds 21. Starts heading beyond the wave 1 high in the long term, right? Everyone hates long term, but you know, with Twitter and Bitcoin, we see why long-term counts are important and why position sizing is also important. But that Snapchat, I think we're going to bounce from the 61.8 to 78.6% retracement. And this is just kind of emblematic of, you know, regular people aren't supposed to catch this, right? They're not supposed to catch a lot of the counts that we're about to talk about. I think Snapchat is really a great kind of holistic view of what's coming. A lot of people, they're going to be thrilled about Snapchat in the 80s, right? They're going to be thrilled about Snapchat at 100 down the road. Oh, it's a great company. It's the future, you know, and no one's going to remember this. No one's going to even know what were we talking about when this wave C happened. Does anyone know? Does anyone even know now? Because they're definitely not going to know when Snap's in the 80s to the 90s. I don't know, you know, the reason that Facebook's down, but I think Facebook's going to participate in this rally too. I think there's a few ways to view Facebook. I think one of them, either way, basically above 137 is a little tighter. I think 137 is a great level. This is a wave 1 and a wave 2 for Facebook, right? It's another social media stock that's on the bar chart, straddle, and strangle screener that could have a massive setup in the long term, right? This is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2 at the 78.6% retracement. The length of wave 1 places the wave 2 low can take Facebook up into the 420s in the big picture. In reality, that's a conservative wave 3 target. We'd have a shallow wave 4, the retest the wave 1 high, then the length of wave 1 places the wave 4 low. I'm not saying that, right? But Facebook has a lot of upside with Twitter, with Snapchat, right? And I'm sure they're all going to have their own little special reasons, right? Let's look at First Solar. I meant to talk about First Solar with the semiconductors. I think I'm, you know, happy I included with kind of this growth and tech-ish related sector. But I think First Solar is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. What First Solar kind of shows is that the solar sector has been accumulated for a long time, you know, specifically 10 years. I don't think it's some overnight fad, right? A lot of people think that it's a pipe dream that we're going to have solar energy. But I think this is a 10-year base, right? It's easy to call something a 10-year base when it's up here, right? The institutions were accumulated in it. I'm so smart talking about it at the 350s, right? But I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. And yes, another wave 1, another wave 2. They're going to call this a fake down and a failed breakout and all that crap. No, this is a wave 1 and a wave 2. The length of wave 1 places the wave 2 low. It says First Solar is going up to the 150s, even possibly the 180s for wave 3 before a shallow wave 4 and a wave 5 higher. I think it ends wave 2 at the 61.8 to 78.6% fib. Starts heading to the 150s and the 180s, even in my opinion beyond, you know, the 150s and the 180s. We'll see First Solar in the long term, well in the 200s, when it ends this wave 3. I think it would look something like this for FSLR 1, 2, wave 3, right? But again, this is something institutions have accumulated for 10 years, right? And you know, they can get you out of it in a couple of weeks. Isn't that great? But anyway, this is a 1, 2, 3, 4, 5 waves impulse that I'm expecting from FSLR. So I think it would look something like this, where we have 1, 2, wave 3, wave 4, and then wave 5 up to the 200s would complete this wave 3. So even getting to the 200s in the long term wouldn't be the end of the world for First Solar, in my opinion. So I think this is 1, 2, 3, 4, 5 waves. We're going to see First Solar head up to the 200s in the big picture. So a very wide level would be 48. I think the low of 61 right now, it's a little tight for something with an extremely high beta, but 61 would be tight, 48 would be extremely wide. But I do think ultimately, the reward is going to be a little asymmetric to the risk that First Solar going to the 200s isn't even the end, right? That's just where wave 3 ends. And that's only just where one wave 3 ends. Wave 1, wave 2, wave 3 up to the 200s. We have a consolidation period for a while. But ultimately, wave 4 and wave 5 is where we could see First Solar go up to the kind of all-time high from 2008 even. So that is FSLR. Here is Starbucks and Southwest Airlines and Disney. I thought about including these stocks right after SPY, but they really just kind of show, and all I'm really trying to show with these are 61.8% retracements of the 2021 March 2020 rally, right? So I didn't invent the 61.8% retracement. This is a wave 1 and a wave 2 for Starbucks, all right? This is a wave 1 and a wave 2 from that 2020 low for Southwest, right? This is a wave 1 and a wave 2 from the 2020 low for Disney. And everyone's saying that I'm a lib because I like Disney from a charting perspective. Oh, Puppy Trade's a lib. He's a lib. Okay, I'm not a lib. I didn't fall for the duality and the, the illusion of choice. All right, but this is a 61.8% retracement for Disney. This is a 61.8% retracement for Southwest Airlines. This is a 61.8% retracement for Starbucks, right? Did I invent the 61.8% retracement? No. This is a wave 1 and a wave 2 for Starbucks, right? This blue chip in the consumer discretionary kind of commodities related even area, right? Disney is in a whole host of sectors like travel, like streaming, like whatever, fun sector is. Anyway, Starbucks, Disney, Southwest Airlines, these are stocks in sectors all over the market. These are blue chips in sectors all over the market with 61.8% retracements possibly ending wave 2. So this is not a rally that a lot of people are kind of meant to catch, right? In the future, if Starbucks is in the 120s and I tell someone I own it, they're not going to ask me why, right? When Southwest Airlines is at a new all-time high and I tell someone I own it, no one's going to ask me why I bought Southwest Airlines or why I bought Disney, right? Because to them, that just makes sense. They're not going to remember the drama with the CEO. They're not going to remember whatever they're putting in the media for you guys to argue about Disney, right? Because what is Disney really? You're gonna be talking about Disney as some political thing, like you're gonna go wear a wristband. No, this is a 30-year wave 1, right? This is a 30-year wave 1, and they have you talking about politics at wave 2, right? They're keeping regular people out of a rally that is going to take Disney conservatively to the 330s, right? And this is a blue chip. So what's important? Why am I saying the word blue chip? A company like Starbucks, a company like Southwest Airlines, a company like Disney, in my opinion, I'm not trading against zero for these names. And I'm not trying to get grandiose, but with these 3 companies in particular, what I'm trying to show is that it's all over the market. Right? The transportation sector, the travel sector, the consumer discretionary sector. And for Disney, the large cap, mega cap, blue chip sector. 30-year wave 1 and wave 2, right? This is another wave 1 and wave 2. We're all talking about, some scandals, right? This is a wave 1 and a wave 2 for Disney. The length of wave 1 places the wave 2 low, says while you're having your little argument and debate, the institutions are loading up because they know Disney going to the 240s is a conservative target for wave 3. We have a shallow wave 4 that retests the wave 1 high. Then the length of wave 1 places the wave 4 low, can take Disney up to the 330s in the big picture. Now, most people, they're not even going to be still investing by the time Disney's in the 330s, right? They were talking about the Don't Say Gay initiative, right? And then their trading careers ended by the time Disney's in the 330s, right? They're not even going to remember, what they were talking about. But in my opinion, Disney getting to the 330s, that's just going to end the Black Wave 3, right? That just ends this Black Wave 3 off the chart. We have a, consolidation period for a while, but that's not the end. We have a wave 4 consolidation period and a wave 5 higher. So Disney's ending a wave 2 at the 61.8% retracement above the 78.6% fib of 105. It can go up to the 330s, and that can end a wave 3. In my opinion, that wouldn't even be it, right? Starbucks. You ever heard of Starbucks? 1, 2, 3, 4, 5, wave 1. ABC, wave 2 at the 61.8% retracement. I didn't invent the 61.8% retracement being where wave 2 ends. All right. These are computer algorithms that are messing with you. Wave 1, wave 2, right? Talk about Howard Stern. I think it's Howard Stern or Howard Schultz. No, Howard Stern's the other guy. This is a wave 1 and a wave 2 at the 61.8% retracement. It's all over the blue chips, and I'm about to show it's all over the world. That we're ending 61.8% retracements that could be ending wave 1, wave 2. The length of wave 1 placed at the wave 2 low can take Starbucks up to the 150s before a shallow wave 4 and a wave 5 higher, right? So everyone's going to be in love. The point is everyone's going to be in love with Disney and Starbucks and Southwest Airlines, right? Their whole fundamental tune's going to change, right? Don't you get it? They're not going to be bearish Starbucks when it's in the 180s. Right? They're not going to be bearish Disney when it's in the 250s. No one's even going to know what the hell we were talking about during that dip. Right? They're not going to be bearish Southwest Airlines when it's in the target we're about to go over. Right? Fundamental views change. 61.8% retracements don't. This is a wave 1 and a wave 2. Starbucks can enter wave 3 to the 150s before a shallow wave 4 that retests the wave 1 high and a wave 5 higher if it's the length of wave 1. That can take Starbucks up to the 200s, right? Is anyone gonna remember what we were talking about when Starbucks is in the 180s or the 200s? Probably not. Probably not. Southwest Airlines, right? Another one, right? Ever heard of Southwest Airlines? This is a company that the world runs on. Wave 1, ABC wave 2, that ended at the 61.8% retracement, right? So if we're above the 78.6% fib, which is a little wide, of 31, a little tighter would be 36. The length of wave 1 placed at the wave 2 low says all these companies that we're very familiar with, that we kind of need to function as a society are ending wave 2 at the 61.8% retracement. And the only reason I keep bringing up that they're blue chips or whatever is because there's this idea of a margin of safety, right? A company like Starbucks and Disney and Southwest, they have so many assets that in theory, a long investor isn't trading against zero. Now, you can always become an accountant and talk about debt. Okay. But we're ending wave 2 all over the market, not just in America, but the world. All right. This is wave 1 and wave 2 for Southwest. Above 31 is a little wide, 36 a little tighter. The length of wave 1 placed at the wave 2 low can take it to 79. I think it's also a little supporting evidence with Disney. The length of wave 1 placed at the wave 2 low takes it to 79 if there's a wave 3 in a wave 4 that retests the wave 1 high. Then wave 5 is the length of wave 1 placed at the wave 4 low. And in the big picture, we can see Southwest Airlines double and go up to 106. So that's Southwest Airlines. That's Disney and that's Starbucks. That's the American blue chips. But it's not just America, right? It's not just America, right? Oh, no. You're not just missing America, right? The bourgeoisie isn't just getting bearish assets then missing this, massive rally that's going to occur in America. Oh, no. They're not that nice. No, they're going to make you miss the world. We're going to miss the world. This is a wave 1 and a wave 2 for the emerging markets. This is another wave 1 and another wave 2 for the emerging markets. And from this 2020 low, kind of very similar to the 3 stocks we just talked about, we form a wave 1 and a wave 2 that ends where? Oh, it ends at the 61.8% retracement. That's where wave 2 ends, above the 78.6% fib of 36. the length of wave 1 places the wave 2 low, can take the emerging markets up to 70 before a shallow wave 4 and a wave 5 higher. The length of wave 1 places the wave 4 low ultimately can take the emerging markets to the mid 80s, call it 87. And in my opinion, that would just end this blue wave 3. So even the 80s for EEM, I don't think in the big picture that would be it, right? And someone pointed out, a while ago that a lot of people haven't really been around, unless they're, old geezers, for a period where the emerging markets outperformed America, right? That's kind of a very, not to be, punny, but that's kind of a very foreign idea to us. But that the emerging markets would outperform America. But that's happened before. And what we can see is that this is a wave 1 and a wave 2, right? You're not just missing the Disney dip, right? It's not just Starbucks that the trading community, right? The FinTech community that draws RSI divergences and whatever. It's not just that they're missing. They're gonna miss the world. Wave 1, wave 2, 61.8% retracement. Why? Because it's all about dopamine, baby. If I'm called a bag holder tomorrow, then I don't care about this. Right? That's really how a lot of people think. If I'm going to be called a bag holder in the next 3 days, then I don't want any of this. I don't want any of this. And you're not going to get it. This is a wave 1 and a wave 2. The emerging markets going into the 80s is just where this blue wave 3 would end, in my opinion. That's just a stop in the road. We end the blue wave 3. 1, 2, 3, 4, 5 waves up to 87. Just ends this blue wave 3, in my opinion. And that's very valid above 36. So that's EM, right? Germany, oh, you wouldn't believe it. Another global ETF, another global index, the DAX, ending wave 2 at the 61.8% retracement, right? ABC, correction. The length of wave A, place of the wave B high is where wave C ended. Then Germany, a country that's got an awful lot of manufacturing stocks, a lot of kind of industrial inflation related stocks, forms a wave 1 and a wave 2 at the 50 to 61.8% retracement. So 24 is pretty tight, but that's quite a defined risk. I think 20 would be a little wide. The length of wave 1 places the wave 2 low is going to take the DAX up to 42 from 27. Then we'd have a shallow wave 4 that retests the wave 1 high. Then the length of wave 1 places the wave 4 low can take the DAX ultimately to 53 for waves 1, 2, 3, 4, and 5. Very valid above 20. I think 24 is a little tight. But what we just talked about, a German stock market index possibly doubling. Possibly conservatively going to 53 from 27 in the big picture. This is wave 1 and wave 2. The length of wave 1 places the wave 2 low, gives a conservative target for a whole country of 43 before a shallow wave 4 and a wave 5 higher. Right, so there's the potential for whole airlines to more than double, right? Starbucks to double, the DAX to double. And those aren't even really kind of growth names, right? Those are kind of mature vehicles. Anyway, the Hong Seng, right? It's everywhere. All over the world. Wave 1, wave 2. When was that wave 1 high put in? Oh, 2007, right? 2007. Well, anyway, this is another wave 1 and another wave 2 from this low that occurred in 2008. What I'm trying to get at is that what the Hong Seng is about to do, what the emerging markets is about to do, what Germany, what Brazil, what, just start throwing darts at foreign country ETFs is about to do is very similar to what the United States of America did after the 2008-2009 low. We had this huge rally where we're very, very far above this kind of previous 2007-2008 global crisis high. What I believe is going to happen when we look at the emerging markets, when we look at the Hang Seng, when we look at the DAX, when we look at Brazil, when we look at, an awful lot of countries, is that this is basically, the 2007 high. And while American indices have exploded above it, a lot of foreign indices like the Hang Seng, like the emerging markets, they're just now breaking above it and retesting it. So we're going to call this, from a classical trading perspective, a failed breakdown. It's going to zero. From failed moves come fast moves. And then when it gets back up, this is a base breakout. They lure the retail shorts. This is a huge 10, 15-year base being broken out of right now. From an Elliott wave perspective, we don't call this a back test. We call this wave 2. And waves 3 of wave 3, in my opinion, are on the horizon. And what's eventually going to follow is that what we saw in the United States for the past 10 years is what we're going to see from China, what we're going to see from the emerging markets, what we're going to see from Germany, from Latin America. Hopefully I'll find, other countries, but I think we're good right now with, most of Asia, most of Latin America, most of, Europe, right? The Hang Seng, 1, 2, 3, 4, 5, wave 1, ABC, wave 2. I mean, I really like that you guys think I made the 61.8% retracement, but I didn't. All right, someone a lot smarter than me made the golden ratio. This is a wave 1 and an ABC wave 2, where the length of wave A placed at the wave B high is where wave C ends. So the Hang Seng above 15.5K, the 78.6% retracement, can be followed by wave 3 of wave 3. The length of wave 1 placed at the wave 2 low is going to take the Hang Seng to 41,000. And that's just going to be where this red wave 3 ends. That's just where the red wave 3 ends. We're not even talking about the black wave 3 yet. All right, there's a shallow wave 4 that retests the wave 1 high. And wave 5 is the length of wave 1 placed at the wave 4 low. Then in the long term, this black wave 3 may not end until 55,000. Does that sound like a rally that a lot of, regular people drawing RSI divergence and triangles are going to catch? No. And you know what's funny? We spend so much time asphyxiated calling people dumb money. You're dumb money. No, this person's dumb money. No, that person's dumb money. This person, no, I'm the smart money. I'm doing but you know who's really the smartest money right now? The citizens of China. The citizens of the world. Just the regular old people, right? The citizens of Germany, right? I'm assuming they have similar 401k systems to us in America. I honestly have no clue. But if they're getting 401k matched right now, in Germany and in China and in the world, then in my opinion, the citizens of those countries are going to catch what we just saw the American dumb money citizens catch, who just acted like they didn't know anything, right? Just kept matching out their 401k. And then their biggest position was catching SPY, exploding with the tech stocks, for a decade. And I think we're about to see this occur in the Hang Seng. We're about to see this occur in Germany. We're about to see this occur in the emerging markets. And it's going to give me a lot of pleasure to see that the dumb money, the regular citizens, just the average Joe, who were like, nah, you know what? I don't really know much about markets. I'm just going to keep, doing what the system says, maxing out my 401k, right? I can't touch it for 40 years anyway without taxes, so I won't. They're going to be the ones who wake up with kind of the big treasure chest that we just saw the baby boomers in America wake up with. So congratulations to those people. Here is NetEase. I think NetEase is in that techie sector, the techie side of China. This is a wave 1 and a wave 2, right? You don't think there were bearish headlines about NetEase during all of these little dips and bullish headlines, and there's always headlines, right? That's why it's called the news. The point with Disney, the point with Starbucks, the point with Southwest, there's going to be new news stories, right? There's going to be new news stories, and we don't know what they are. But the people who bought all those options on the oil stocks in November and December, maybe they just got lucky, right? Maybe all the people who always buy options on, that appear on the long straddle, long strangle index, and then we look at them, we're like, why would this stock move? And then all of a sudden we find out, right? For NetEase, I think we're going to find out a lot. I think we're going to find out a lot from China. I think this is a wave 1 and an ABC wave 2 at the 61.8% retracement. So the 78.6% fib, 57 is a little wide. I think this wick right here of 68 is a little tighter, but this is just like the Hong Seng we just looked at. The length of wave 1 placed at the wave 2 low, that gives a conservative wave 3 target of 166 before a shallow wave 4 that retests the wave 1 high and a wave 5 higher. If wave 5 is the length of wave 1 placed at the wave 4 low, NetEase can go to the 230s. And in my opinion, that would just end this black wave 3 in the big picture. That's NetEase. It's a massive Chinese internet stock, and it's held up a little better than Alibaba. So Alibaba is a pretty similar idea, but it's gotten a lot more beaten up than NetEase. So that's why I think NetEase has to be viewed with Alibaba. So that's certainly what I'm doing when I entered Alibaba. 1, 2, 3, 4, 5, wave 1, ABC wave 2 for Baba, and I think we're gonna go enter wave 3. I think we'll hold above 57, which is this all-time low, and go wave 1, wave 2. The length of wave 1 placed at the wave 2 low can take Alibaba up to the 330s for wave 3 before a shallow wave 4 and a wave 5 higher. Realistically, if we go above 319, then the wave 3 target would be a lot further than 319 or in 334. Sorry, the 330s, because usually the 161.8% extension of wave 1 is the wave 3 target. So I do believe that this is a big base. This is the left side of the base. And when we see NetEase, when we see the Hong Seng, when we see, a lot of these stocks that we talked about turn around, we're going to see Alibaba form the right side of the base. And then it's going to be very obvious in hindsight to see, oh, yeah, they were accumulating this whole time. And I think they are. So I think this is a wave 1 and wave 2. I'm going to hold Alibaba forever. I'm going to hold all my Chinese growth forever, because it's about the big picture, right? And people aren't supposed to catch, people aren't supposed to catch this, right? People aren't supposed to catch this, right? People aren't supposed to catch this. What I think is funny is that we're going to see the citizens of these countries, right? The dumb money, bourgeoisie, workers. And I'm not calling like anyone in these, countries dumb. I'm saying, in general, right? The kind of average Joe just kind of buying into their 401k. I don't know, man. I'm not going to follow the news like that. They're the people who just caught the biggest rally in SPY and the NASDAQ, for the past 10 years. I think we're going to see that happen in the world. And I think China specifically is going to be quite the opportunity. So I'm taking advantage of it. I think this is wave 1 and wave 2. We'll hold 57 and head to a new all-time high for wave 3. So in wave 3, that would just be a very conservative expectation that it reaches 334. Even if we have a shallow wave 4 and a wave 5 higher, because realistically wave 3 goes a lot further than 334. Then we have a wave 4 that retests the wave 1 high. If wave 5 is the length of wave 1 placed at the wave 4 low, then in the big picture, I think Alibaba can head up into the upper 500s. Now, that is a long way away in time, but I'm here for it. So that's Alibaba. Here's Shopify. We'll talk about some of these e-cash and e-commerce stocks, right? E-cash and e-commerce, it's a fad, right? It's a scam, right? It's a scam. They're fads, right? They're bloated bubbles, right? Isn't that what we said about big tech, in 08 and 09? Anyway, I think this is a wave 1 and a wave 2. And I'll take the tech comparison a little further, because what I believe is that what we've seen, or what I've kind of just, made the case for, is the idea that global indices are going to rally in a very similar fashion than what SPY and the NASDAQ did for, after the 2009, from the 2009 lows, right? So I think, as far as the global indices are concerned, we're somewhere between 2010, 2011 in the DAX, the global indices, the Chinese stocks, somewhere around there. But I think within kind of that conversation, the stocks in ARK, the stocks in maybe the Fintech sector, the clean energy sector, maybe the streaming sector, the software sector, the cybersecurity sector, the current kind of ARK stocks today, right, that everyone loves to make fun of, I think that these stocks are going to be the big tech kind of version of what we saw from the 2010s, right? So if the DAX and the Hong Seng and the emerging markets are spying QQQ in 2009, 2010, I think a lot of the ARK holdings, like Shopify and, PayPal and, stocks like that, I think those are going to be very analogous to big tech, FANG, in the 2009, 2010 area. We'll talk about that a little more. For Shopify, I think this is a 1, 2, 3, 4, 5, a big wave 1 and a wave 2. We're at the 61.8 to 78.6% retracement of a clear 1, 2, 3, 4, 5 waves impulse. So honestly, from an Elliott wave perspective, I kind of think there's only one view, right? Obviously, you can always just call for, more downside up, one more leg lower, but that's kind of burying the lead, right? The lead, in my opinion, is that this is wave 1 and this is wave 2. The length of wave 1 placed at the wave 2 low can take Shopify up to 2,190 in the big picture for wave 3 before a shallow wave 4 and a wave 5 higher. If it's above 390, that's a little tight. I think 305 is a little wider. We look at PayPal right now, almost identical to the chart that we just looked at. PayPal formed a 1, 2, 3, 4, 5 wave 1. I think it's ending wave 2 at the 78.6% retracement. So there's no low to trade PayPal against, but I do think for Shopify being above 305 to 391, that these charts are quite similar. We're at the 78.6% retracement. So this is where they get everyone out, they get everyone stop and up. I can't own PayPal. It's below the 78.6% retracement, and we'll talk about what happens after that. I do think there's a supplemental downside level with PayPal from Shopify. Above 390 would be very tight, and 305 would be quite wide. But I do think this is wave 1 and wave 2. And I do think what we're going to find is that PayPal, Shopify, and Square Cash now are what MasterCard, Visa, and Amazon were in 2009, 2010. And the end of 2008. So we'll talk about that. Let's just look at Amazon right now. See where could this be coming from? So in the more recent view of Amazon is that this is a wave 1 and a wave 2. This is a big wave 3 and a wave 4 that ended at the 50% fib. So it's pretty tight to say that 2,666 is the stop. But the length of wave 3 placed at the wave 4 low, which was right at the 50% retracement, can take Amazon up to 4,821. If I had to be in the short-term kind of dopamine fix crowd, I think this is a wave 1 and a wave 2 that form from this low. We're going to see Amazon extend higher. And I think this could be in the shorter term that we see this. But what I want to talk about with Amazon, what happened a long time ago. What can happen, right? What can happen? It's all about defining the risk. I think what we could be seeing, with Shopify and with PayPal is that this is wave 1. This is the ABC wave 2. What we just talked about, we're below the 78.6% fib. I guess I need to sell, right? I got to admit that I'm wrong, right? Right? Someone on, FinTwit called me a bag holder. But what can happen for wave 3 could still be in progress 10 years later. So I think Amazon, I think MasterCard, they both have this 61.8 to 78.6% retracement. This kind of multi-year ABC correction that's just brutal, right? It makes everyone, you're up, you're a bag holder, you got scammed, this and that. You go below the 78.6% fib. Now there's no level to trade against, and we see why they got you out. We're still seeing why they got you out to this day. They're still getting people out. Anyway, I think that's where if the emerging markets, if the Hong Seng, if the DAX, if Brazil, if the world ends up being the American indices in the late 2000s, then I believe a lot of the modern Cathie Wood stocks like Roku could end up being what big tech was during that time, to fit that analogy. So I think this is a 1, 2, 3, 4, 5 big wave 1 for Roku. Just to set the record straight for Roku, PayPal, Neo. Yes, I was expecting them to hold their May lows, and they didn't. But I originally got really bullish those stocks way back before the summer of 2020, before all of them exploded. So I'm batting 50-50 on those names. Anyway, 1, 2, 3, 4, 5. Wave 1 for Roku. ABC wave 2 at the 78.6% retracement. They don't make these easy. But I do think, when we talk about the highest possible return potential, the biggest kind of outperformer, for the big picture, if we do see this rally develop where all these stocks at the 61.8% retracements, all these global indices at the 61.8% retracements begin wave 3, a stock like Roku, a stock like PayPal, it could be the biggest outperformer. And I think this is a huge wave 1. To me, it's a clear 5-wave subdivision. Now we're at the devastating wave 2, the 78.6% retracement. So what happens if we end wave 2? First, for a stop, this low of 58 is pretty wide. So I really manage risk with growth with position size. I don't have a stop for Alibaba or XPEV or Lee. I'm just going to hold them. Okay, but I think this is a wave 1 and a wave 2. The length of wave 1 placed with wave 2 low can take Roku on a wave 3 rally above 490 up to the 550s. Now, if we got above 490, then 558 would be a conservative wave 3 target, because usually wave 3 goes to the 161.8% extension of wave 1. We have a shallow wave 4 that retests the wave 1 high. Then wave 5 is the length of wave 1 placed with wave 4 low. That can take Roku up to the mid 900s in the long term, in the big picture. Most people right now aren't even going to have any interest in the stock market or investing or trading by the time Roku's at the 400s, right? They're going to be long gone by then. By the time it's in the 900s, they might get back in the market. Maybe there'll be a stock split or two and try again. But in the 900s, that's a long way away. But I think it's going to happen in the big picture. Huge wave 1 and wave 2. We can see Roku enter wave 3 with Disney in the streaming sector and also with Netflix in the streaming sector. So we'll talk about Netflix right now. We did lose this low, or we lost the 78.6% retracement, which I believe was about 330 for Netflix. We look at the big picture. We're at a huge 61.8 to 78.6% retracement of the all-time rally, right? This is Netflix's all-time chart. Huge wave 1, 2, 3, 4, 5-wave subdivision, and an ABC correction ending wave 2 at the 61.8 to 78.6% retracement. So above 151, we can see Netflix begin a massive wave 3 in the big picture, well beyond 700. So we lost the 78.6% fib. I don't think that it's the end of the world for Netflix, but it probably would take a little bit of time to recover and get all the way up to the 700s. I think when we do, we'll be within a massive wave 3 that will be, at minimum, the length of this entire multi-year rally, this decade-long rally getting replicated. And this is a huge wave 1, and this is a wave 2 at the 61.8% retracement. Wave 3, in my opinion, would go well beyond 700 for Netflix. Let's talk more about some Chinese growth. We have NIO and we have XPEV, very similar to, I think, Tesla and Enphase Energy and First Solar. They have to be viewed as a group, not just with those names, but also with NetEase and the Chinese growth kind of corner. But I think there's a lot of evidence from First Solar, from Enphase Energy, and from Tesla, specifically Tesla and Enphase Energy, because they're large holdings of QCLN with NIO. I think this is a wave 1 and an ABC wave 2. We're at the 78.6% fib. NIO, I was originally bullish NIO from here, and then it fell below the May low, like a lot of the ARK stocks. So we're 1 for 1 on NIO 2. We're at the 78.6% retracement. I think 13 is pretty tight. I'm going to hold my Chinese growth stocks for the long haul, and I think a big part of the risk management that I'm going to be using with NIO is the ICLN straddles and strangles that I shared at the beginning of this video. But I think this is wave 1 and wave 2. NIO, in my opinion, will begin wave 3 into the 60s and well beyond the 60s. NIO can go on a huge wave 3. The length of wave 1 placed at the wave 2 low takes NIO up to 80. If there's a shallow wave 4 that retests the wave 1 high, and wave 5 is the length of wave 1 placed at the wave 4 low, then we can see a path that takes NIO into the mid 100s in the big picture. So I think this is a wave 1 and a wave 2. And I think this view is also kind of supported, not just with NetEase, Tesla, and Enphase Energy, and First Solar, but also with XPEV, a very similar, name, almost an identical sector. I think this is a wave 1 and an ABC wave 2 for XPEV. This is where this IPO base kind of look can form for XPEV, where this is a wave 1 out of the IPO. This is an ABC wave 2. And I think we're going to end wave 2 and begin wave 3. So I'm in XPEV for the long haul. Here is Nokia. Kind of mix it up a little bit. I think Nokia has earnings coming up, so I wanted to talk about them. I think from this low, they form a wave 1 and a wave 2. I think this is another wave 1 and an ABC wave 2. So I think we're going to see, I don't know if it's going to be because of Nokia's earnings, but I think Nokia is going to wake up seeing a ton of option buying on the long straddle and long strangle screener, as well as iVolatility.com's top 200 options volume and open interest with low implied volatility ranking percentile. It's usually in the meme stock category. So I'm not sure if Nokia is going to end up being evidence for, AMC and GameStop and BlackBerry, but I wouldn't be surprised if we had another meme stock like move for Nokia. And I don't think it's going to be caused by the Redditors, but I think from this low, this is a wave 1 and an ABC wave 2. We'll see Nokia enter wave 3. I wanted to label this 161.8% extension of 8, but realistically, I don't think that Nokia would stop at 8. I think ultimately the next target that's appropriate for Nia is about, Nokia. I keep saying Nokia and Neo together. Nokia. Oh, anyway, this is a huge 9.79 wave 1 high. I think that's going to be the next target that gets broken as Nokia enters wave 3 of wave 3. So above 4.31, I expect Nokia to go all the way up to 9.79. We'll talk about Royal Gold, Barrick Gold Corp, and SILJ. We had these stocks pull back. I'm a big fan of these names. The reason I want to talk about Royal Gold, very similar to Goldfields, very similar to Pretium Resources, it's already broken this wave 1 high, right? So if someone's bearish gold and silver, in the big picture, right, they're calling for something crazy like gold to go to 800. From an Elliott Wave perspective, they have to find a bear count on Barrick Gold Corp. They have to find, they do have to find one on Barrick Gold Corp, but it's going to be a lot harder to find a bear count on Royal Gold and on Goldfields GFI because they've already broken this wave 1 high. So this is a wave 1 and a wave 2 for Royal Gold. The length of wave 1 places the wave 2 low. It says it's within a wave 3 to the 170s. I talk about palladium a lot. I talk about platinum a lot. But I think ultimately, even if there's a shallow wave 4 that retests the wave 1 high in the future, and wave 5 is the length of wave 1 placed at the wave 4 low, the Royal Gold, this huge gold miner, is going to the 230s in the long-term cycles. And I think this is a big template for Royal Gold getting to the 230s is when in the long term we can see a bigger pullback in the metals. I think this chart is almost identical to Barrick Gold Corp, where we have this wave 1 high that hasn't been broken yet. And I think that Royal Gold, what I'm trying to say, is acting as a leading indicator for GOLD, that this is a wave 1 and a wave 2. The length of wave 1 places the wave 2 low, says we're within a wave 3 to the mid 30s before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 places the wave 4 low, then Barrick Gold Corp can go up to the 50s for waves 1, 2, 3, 4, and 5. SILJ, I think, formed a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. I think 10 would be pretty tight, but I think SILJ is going to the median of this Andrews pitchfork, found by taking the beginning of wave 1 with the high of wave 1 and the low of wave 2. We're at the lower bound right now. I think we're going up to the median to 24 before a shallow wave 4 and a wave 5 higher for SILJ. Here's Bitcoin and Ethereum. I think Bitcoin and Ethereum form a 1, 2, 3, 4, 5 wave 1 and a wave 2. And then from this low, we form another wave 1 and another wave 2. The length of wave 1 places the wave 2 low can take Bitcoin up to 73K before a shallow wave 4 and a wave 5 higher. We're at the 78.6% fib right now. 33K would be pretty tight for something with a real high beta. I think 28.9K is a little more appropriate, but this is wave 1 and wave 2. The length of wave 1 places the wave 2 low. It's going to take Bitcoin up to 73.5K. I